Analyst at the ProShare says the ongoing process of Central Bank of Nigeria to increase the capital base of deposit money banks may not lead to higher gross domestic product. The economist explaining their findings, which contradicts comments by officials of current administration, says the assumption associating big banks with larger economies is unproven. While they stated that an increase in the capital of commercial banks might not necessarily result in improved performance, as indicated in the third edition of the Tier 1 Banks report released earlier in the month. Now, this Bank Strength Index evaluates bank using a pool of financial metrics based on audited financial statements for the financial year 2023. But our discussion today would focus on the impact of the planned recapitalization process on banks operating in the country. Yes, that is exactly what we would be focusing on today. And Mr. Tajuddin Ibrahim, he is the Director of Research and Strategy with Chapel Hill, Denham. He joins me to continue this conversation around this. Good afternoon, Mr. Ibrahim, and it's really good to see you.
Good afternoon. Thank you so much for having me on the show today.
I think I would like us to start by, let me ask you that, what do you think that the planned recapitalization exercise by the Central Bank of Nigeria is ongoing already, but what do you think, what impact do you think this would really have directly on Nigeria's banking sector in general?
So I think the impact on the Nigerian banking sector, generally speaking, will be positive, considering that, it should result in an improvement in financial stability for the Nigerian banking sector. And, when we have, stronger banks with higher capital base, then you are strengthening the financial system, and that, to a large extent, should underpin financial stability in Nigeria. I think from that perspective, it is a positive development, and it is an indication that over the next couple of years, over the medium to long term, Nigeria can boast of higher economic activities that will lead to an improvement in GDP growth over time.
So indeed, it is a process. But coming from where we were when it was last, this process was last instituted, and that was by the Professor Charles Soludo-led Central Bank. I think that was about 18 years ago, if I'm right, or so years ago. Now, at that point to where we are now, in your thoughts, you have been in this industry monitoring activities. What has changed about Nigeria's banking sector?
So major things have changed, particularly when you look at the banking sector from the standpoint of capital. The capital base of the sector has improved, considering that they have been able to build on retained earnings over the years, and some of them have been able to tap into the capital market to raise capital, particularly those that have raised debt capital over the years. Interestingly also, we have seen Nigerian banks over the period under review, which is between Soludo and the current period, we have seen some Nigerian banks raised dollar-denominated capital, basically issuing Eurobonds. So all those elements they come with an improvement in the confidence that investors have in the Nigerian banking sector, particularly foreign investors in this case. If you do not have a much stronger banking sector, the sector will not be able to attract capital. And what we have seen over time is that the sector has sort of strengthened in terms of performance, and that has led to the ability of the sector to attract more local and foreign investors to underpin the growth of the banks. I think these are some of the major elements that have materialized in the banking sector over the period that we are reviewing. Importantly, also, more Nigerian banks have extended their operations beyond Nigeria, and you don't go to operate in foreign countries such as the UK, such as the US, such as South Africa, if you do not have the required level of capital. So, which means that the banks, to a large extent in this case, the tier one banks have expanded their businesses to other countries across the world to facilitate trades, to facilitate payment, to integrate Nigeria further into the global economy in terms of trading activities, in terms of economic activities in particular. So all those elements have materialized. And if we are looking forward for a further improvement and for a further penetration of Nigerian banking sector into the other economics around the world, no doubt we need a much stronger banking sector. And improvement in capital base will go a long way in underpinning that, in my view.
Really, that's brilliant, I must say. But let me follow up and ask you that many would say that the wonder banks, when you hear profits and all of that that they make, that they expect more support for the real sector. But in real terms, we know that interest rates are high. So how do we put this side by side? How do you think small, and not just small businesses, even big businesses, how can they benefit from fundings, from access to loans, grants, and all of that from banks, looking at the present rates? Many say it's not attractive.
So I think we have to bear in mind the one factor that we call cyclicality, economic cyclicality, and business cyclicality is one thing that we all have to bear in mind in this case. No doubt, we will always have periods of elevated interest rates. We will also have periods of low interest rates. I think timing comes to mind here when we are looking at lending to the small businesses. I reckon that some of these small businesses will find it beneficial when they want to borrow from the banking sector to target periods of relatively low interest rates. I mean, the periods that the CBN is not, largely speaking, adopting a hawkish monetary policy stance. I think interest rate seems to be low at such periods. The utilization of debt at such periods will be at low interest rates, in my view. And if such businesses utilize the borrowings very well and effectively, there are high chances that their borrowing needs over the long term will reduce, because they will also have generated higher earnings that can be retained in the business, that can also help their businesses to finance growth internally. At that point in time, they can then reduce their reliance on borrowings by the time interest rates are high. I think it is a global phenomenon. We cannot, rule out the fact that over time, there could be some time that interest rates will be elevated. But what makes the best economic sense, in my view, is to borrow when interest rates are somewhat low, particularly when the Monetary Policy Authority is adopting an expansionary monetary policy.
Now, there are also some interference, if I'm allowed to go that route. Financial technology is something that has come into the banking system. You will agree with me. Many of us don't even go into the banking halls anymore, and we keep doing all our transactions. What are you looking at in the future? What are you thinking? What impact will technology continue to have on Nigeria's banking sector? Because it seems like we might get to a point where the systems might even be doing all of the jobs. Many are scared. Are you sure this will not also affect the steaming youth and all that we have in the banking industry when we're almost automating all of the processes in our banking industry?
So it is good that we automate all those processes because it is a major advancement, to banking, and it is one of the ways that the Nigerian banking sector can bring in more, Nigerians into the banking space and improve what we call financial, inclusion in the country. But in terms of, and if you take a look at it, the adoption or utilization of technology is what is largely speaking facilitating payment across the country. Also facilitating payments and transactions between Nigeria and other regions of the world. If there is no technology in place to do these transactions, we will not be able to trade with the remaining part of the world, using technology. We will not be able to make payments online using technology if we do not improve. So I think, the improvement in terms of the use of technology in the banking sector is positive, and I reckon that, banks, generally speaking, are looking at improving their services in that regard. In terms of how it will impact, people generally, I think that technology will remain technology. Technology cannot and will not completely replace human beings, particularly when you think about the ability to think and come up with solutions. So those elements will still be sitting with human beings, and no doubt they can be put into machines, but the machines cannot really, think for you effectively over time. All this, it will still be done by human beings, and I reckon that, the more of the utilization of technology that we have, the more advancements that we experience, the more our transactions are executed seamlessly within Nigeria, across Africa, and across the whole world, in my view.
But we also see that international bodies or ratings agencies also see Nigerian banks as being stable. If we look at the achievement, the aim is to achieve a 1 trillion naira GDP by 2030. Is it achievable? Number one. And are we running that race? Are we getting to the point where we will achieve this $1 trillion dollar economy? I think it's a $1 trillion economy, 1 trillion naira economy. And where? Take it away.
So absolutely, it is $1 trillion, economy. But I reckon that, we will not be able to achieve, that level of economic size if, number one, we do not, fix our foreign currency, problems. We need a much, stable and a more predictable foreign currency exchange rate, to attain that kind of level. Number two, to my mind, the broad economy is not completely captured in the current estimate of the Nigerian GDP. I reckon that, we will most likely experience another rebasing of our GDP, possibly to 2020. The current GDP we have is rebased to 2010. Every 10 years, normally we should have, a review of the method. So most likely it will be rebased again to 2020. By then, more business activities that have emerged post 2010, will be captured in the new GDP number. That, to my mind, will also, underpin the ability of Nigeria to be talking about $1 trillion, economy in terms of size, over time. But I must reiterate that, stability in FX is very important in that regard.
So do you also agree that inflation, you've mentioned exchange rate issues, and all of this will impact the performance in 2024?
So inflation is a key element, actually, for consideration in this case as well, because when we look at, the GDP from a real GDP standpoint, then we'll be talking about the impact of inflation. And I reckon that, broadly stable, prices are also important in that regard. But from a nominal GDP standpoint, FX stability is very important.
So an overall outlook, if we're to end this now, looking at what we've seen before now, poor assets and liability management have affected banks, just like what happened in the US, Silicon Valley, and the first public signature banks in 2023, and all of these issues around poor access and liability management. How is that like in Nigeria? Do we have that kind of challenge?
I don't think we have that kind of a challenge, particularly when you're looking at the top banks in the country, talking about the tier one banks. Those banks, to my mind, are a lot more resilient. Those banks, to my mind, are a lot, more efficient, and they're a lot more focused on risk management, which I believe, is commendable. And I also reckon that the CBN is a lot effective in terms of monitoring the banking sector, particularly the large banks that I believe are too large to fail because of the contagious effect it will have on the broad banking sector and the economy as a whole. I think for now, from all the indicators I have seen, there is little or no worries around, banks, failing. If there is any bank that has failed recently, take a look at it. It is a very small bank and not the large ones. I think the large ones are here to stay and they can actually grow better over time. And I reckon that the banking, the CBN supervision is strong on those banks to ensure they do not fail. And I have a positive outlook for all the banks in the tier one space over the long term.
Interesting way to live it. Mr. Tajuddin Ibrahim, Director, Research and Strategy, Chapel Hill, Denham. Thank you so much for making sense of this on our program. We appreciate this.
Thank you for having me.
All right.